What's up, everybody? It's Jamel Gibbs, your family-oriented entrepreneur. And what I do on this channel is I teach real estate investors how to create time and freedom through proven real estate investing strategy. So if you're new here, consider subscribing to my channel. Make sure you share this video and make sure you tell everybody you know about it. And also leave a comment. Let's start a conversation in regards to what we're going to talk about on this particular video to be able to help you further in your real estate investing business. So look, in today's video, I want to talk about what real estate investing is all about. I want to simplify it and really help you go from where you are to where you want to go as a real estate investor in today's market. Because ultimately, the real problem is real estate investors are facing other buyers that are willing to overpay for houses. And I want to show you how to combat that to still be able to thrive as a real estate investor in today's market. I want you to think about real estate investing in two key components. You have acquisitions and then you have dispositions. So when it comes to acquisitions, you have what's called distress. This is the key thing that you're looking for as a real estate investor in order to be able to make some type of deal happen. You're looking for distress. Now, when it comes to distress, there's two levels of distress. You have physical distress, and then you also have financial distress. So an example of physical distress would be a seller who's in the hospital. That's physically distressing to a seller, right? Or a seller that's sick. Then you have physical distress on a property as well. A property that needs some work is in physical distress. Then you also have financial distress. So financially distressed sellers would be someone that's facing financial issues. They just lost their job. They're moving to another area. They're going through a divorce, something like that. Financially distressed properties can be a seller that can't pay the mortgage. Maybe they have taxes that are overdue. Maybe they owe money on code violations and things like that. So you have, again, physical distress and you have financial distress. And these are the things that you're looking for when you're acquiring properties through acquisitions. But then you have dispositions. You have to know where you're going in order to be able to help the seller when you're acquiring the property. So dispositions is how you're going to exit the property. So you got one way in through the front door, and then you have a way out through the back door. Whenever you're going through the front, you have to have a way out, right? So a couple of things that you want to keep in mind. In this market, buyers are willing to overpay for properties, which is causing property values to go up. You as an investor are gonna have to pay a lot more for a property in order to be able to make a deal. So I want to talk to you about how you can still overpay for real estate and still be able to make a killing on the other end. The price is not going to matter if you can structure the right type of deal. I created a strategy called hybrid wholesaling. And what hybrid wholesaling allows you to do is have multiple ways of attacking a deal on the front end when you're acquiring the property in order to be able to still make money on the back end, whether it's money up front, money every month, or back end profits when you go ahead and exit the property, right? That's what hybrid wholesaling allows you to do. But more important than that, what hybrid wholesaling does is allow you to have options when it comes to dealing with real estate. So for example, when you think about wholesaling real estate, traditional wholesaling allows you to acquire a property at a discount, but then you're only looking to wholesale that property on the other end. So what does that mean? You have to have large equity spreads in order to be able to make that type of deal work. If a seller wanted full market value or even more than what the property is worth, as a traditional wholesaler, you really can't do anything with that because you're not going to know how to make money on that particular end. So how do you combat that? You use hybrid wholesaling. So for example, what if a seller has no equity in a house and the house needed some work? Most traditional wholesalers will look at that and say, I can't do anything with that deal. But when you start incorporating hybrid wholesaling, there's a way that you can actually make that type of deal work. You could purchase the property on a long-term lease option in order to build equity in the house. Think about that. When you do a long-term lease option and you're making payments, equity is going to be built over time on that property. So really the price doesn't necessarily matter. And then you can sell on a long-term lease option as well. creating an equity spread for yourself over time, allowing you to make cash on a property. Long-term lease options are definitely the answer rather than going a short sale route, for example. The object here is to think about creative ways of making deals happen. If you have acquisitions on the front end and you find the distress on the front end, how can you solve the distressing problem on the back end to be able to make a deal happen for you, the seller, and everybody else that's involved in the deal? I actually wanted to provide you with a copy of my deal matrix, my real estate investing deal matrix, and you're going to be able to download a copy of it below this video. There's going to be a link that says more from Jamel. Click on that link and look for the tab that says deal matrix. And this deal matrix is going to take you through how you can negotiate specific types of deals, hybrid deals, that will allow you to create opportunities for you and your motivated seller, allowing you to become more than a one-trick pony, so to speak, as a traditional wholesaler and turn you into a monster of an investor with multiple ways of helping sellers on the other end. And that's how you're going to be able to combat someone that's willing to overpay for a property. Most of the people that's overpaying for properties, even investors, are paying cash. But sometimes those cash opportunities don't present itself with these motivated sellers. They're just not good deals for the sellers. So you can provide better opportunities with creative solutions, being able to close these deals, still allowing the seller to get what they want while you're able to get what you want and creating profits in these deals as well. So make sure you go ahead, download the deal matrix below. Do me a favor, like this video, subscribe to this channel, click the notification bell, and I'll see you guys on the next one. Peace.